Welcome back. This is Chili Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. This is a channel where we talk about my top stocks. And today we're going to talk about some stocks that will report earnings this week or early the following week. So right now we're on earningswhisper.com. And the three stocks we're going to talk about is JP Morgan, Bank of America, Microsoft, and Netflix. So those four stocks we'll talk about briefly. JP Morgan stock, and then we'll go into the other three. So JP Morgan reported on Friday. They are the first bank company to report earnings, and there was some guidance about Bank of America reporting as well. Bank of America reports on the 19th, which is this Wednesday. But right now we're looking at the earnings call that happened on this Friday. This is where the analysts get to talk to the company itself about what earnings was reported, about revenue, assets, liabilities, and then of course the forecast for going forward. So this is the earnings presentation I was given on Friday. And as you can see, the CFO is on the call. The CEO is on the call as well. So you get basically the leadership of the company. They make statements about how well the company is doing and where's it going. Here is Jamie Dimon. He's talking with the analysts. So the first half of the call is about the financials, all the revenue and discussion about how well they did for the current quarter for Q4. And then the second half of the call is where analysts get to buzz in and ask questions directly to the CFO and the CEO about how the company is doing. So it's sort of a regular flow, and you'll see this flow happen again if you listen to other investment calls. Bank of America is coming up on Wednesday, and others are coming up on the following. So you got Bank of America on 119. You have Microsoft on 125, and you have Netflix on 120. Also, some things I'd like to mention about, Jamie Dimon, the CEO of JP Morgan. Last year, JP Morgan, Chase. So if you bank with Chase, you're part of the JP Morgan family as far as consumer side. But I do invest in JP Morgan, the stock as well. But if you look at the last year, JP Morgan did 14%. So that's pretty solid. Most time if you invest in a 401k or a standard fund, you're expected to get 8 to 10% a year. Last year, JP Morgan bank stock did about 14%. And as you can see for the last 2 weeks, the first 2 weeks of the year to date, they haven't done much. It's been down, looks like 2% for the first 2 weeks of 2022. But if we project on what they did last year, 14%, let's see if JP Morgan for 2022 can do 20% or even 16%, 2% more. So that's what's the best part about the beginning of the year is you can project where do you think the company's going to go from its current price. So let's say right now it's trading at 157. Can it go to 170 by the end of 2022? So that's the best part of the beginning of the year. You can project where you think the company is going. Okay, really quickly, just to talk about Jamie Dimon. Jamie Dimon income is described as paid as $31 million. JP Morgan paid Dimon a salary of $1.5 million, as well as $5 million cash bonus and $25 million of restricted stock. So this is how real wealth is created. Jamie Dimon does not get cash all the time. He essentially gets $1 million a year, and at the end of the year, they give him a bonus of $5 million. So in a total, he roughly makes $6.5 million. And then half, I would say probably a large percentage may go to taxes, but the rest, the 25 million he makes is in terms of stocks. They give him opportunity to purchase $25 million worth of stock per year. And it's not just your general stock. You're not he's not out there bidding on the stock. So if the stock is trading at $157, more than likely, Jamie Dimon, the CEO of JP Morgan Chase, is getting it at 120, 130 per share. So just understand that the best way to create wealth is through stock investment. It's not through cash payment or through salary income. It's one way to build wealth, but it's just part of the equation. Okay. So Jamie Dimon was paid $31.5 million in 2020. Now, if 2021 numbers come out, he'll probably have made 35 million or maybe even 40 million. Who knows what CEOs are making, but roughly the numbers stay the same, probably still 1.75 million, and then probably a cash bonus to 5 to 7 million, depending on how well the company does. So that's just a quick show of what type of money CEOs make, but what percentage of it is actually cash value versus stock value. Okay. All right. So enough of my rant. Let's get on to the two stocks to watch coming up. Bank of America stock is trading at $47. And again, they are headquartered out of Charlotte, North Carolina. They have a 52-week low of $29.57, and they pretty much have a 52-week high of $50.08. So pretty much they're at their peak right now. I don't know that it's a great time to get in right now, but if interest rates go up and the outlook starts to look good, the consumer is in good shape in terms of savings rate and certain aspects. The problem is you have a lot of other people in the economy who are still out of work. So right now the banks are giving some sort of, I guess, in between forecast, but I think Bank of America over the next year can go up 10, 15%, just like JP Morgan did last year. But if you were going to buy some Bank of America, I would still wait for a pullback. Let's take a quick look at tip ranks and see what the forecast is for Bank of America by other Wall Street analysts. So we look at the Bank of America forecast. This is based on 15 Wall Street analysts offering a 12-month price target for Bank of America in the last 3 months. The average price target is $52, and the forecast high is $64. So that is what 15 Wall Street analysts think is going to happen to the Bank of America stock in the next 12 months. So basically 2022. And that's pretty decent. Like I said, $64. 10% move on the stock would be about $5, $6. And then another 10% on top of that would make the stock trade at $60 per share. So again, I think Bank of America, as long as the economy stays stable, consumers are able to travel, consumers are able to borrow more money. Again, there's still a housing shortage out there. So all those things fall in line. So if more consumers buy homes, more consumers buy cars, more consumers go on vacation, and there's no delay, then you can see the stock easily probably hit $64 per share. The only thing we do not know right now kind of is how many people are going to stay unemployed and if the Fed actually decides to raise the interest rates early or waits late in the year. So right now, Bank of America stock is projected to go in the next 12 months, $60 to $64 per share. So that's a good place to be. If you're in Bank of America, good deal. I was fortunate enough, I got in the Bank of America during the last crash. So we look at Bank of America about 2 years ago. I got in Bank of America. Actually, I got in about $22. So pretty much I'm set. I'm not selling it. I got in here at the bottom, right here, May 2020. This is where billionaires and millionaires are made. Of course, is when the market bottoms out. We did see during this first 2 weeks of January of 2022, the market kind of dropped some stock prices. But if you buy high quality stocks, even during these uncertain times, you can be very prosperous moving forward. But we have to wait to see what happens with the Fed and how the economy behaves with higher interest rates in different aspects moving forward. Okay. The next stock I wanted to talk about is Microsoft. Again, Microsoft is an excellent stock to own. It is a multinational technology software company. They do conferencing calling software. They do cloud software. They have consumer products. They have like one of the top 5 operating systems in the world, Windows platform, and is led by Satya Nadella. The stock has a 52-week low of $212, and the stock has a 52-week high of $349. So that made me a good time. I mean, actually, the stock is down quite a bit, actually 10%. Right now it's down at $310. So right now could be a good time to pick up some shares of Microsoft. Again, we'll see what they report coming this week. We go back to Earnings Whisper. They report on the 25th. So let me take that back. They report the following Wednesday. Okay, so they report the following Wednesday. But again, Microsoft is an excellent stock that is highly undervalued right now. It has a 52-week high of $349. Right now, it's trading at roughly at $310. And they also pay a slight dividend of 0.80%. So we look at what they did last year. They grew about 50% last year. I would say the stock could at least grow, let's say half of that at 20%. You're looking at a $60 gain over 2022. So keep your eye out on Microsoft. Let's see what happens after the call on next Wednesday. Again, Microsoft's one of the most powerful companies, one of the biggest tech companies on the NASDAQ. Microsoft led by Satya Nadella. Will they give great earnings call on next Wednesday, the 25th of January? Okay. And my last stock to talk about is Netflix. I own Netflix as well. It has a 52-week high of $700 and a 52-week low of $478. Now, Netflix is facing extreme competition right now. It says Netflix is a subscription streaming service and production company. So they make movies, they make TV shows. They made the Squid Games a few months back. Again, Netflix is a $25 billion revenue company with over 9,000 employees. They don't pay dividend because they are a growth stock. Right now, they pay a lot of money. They have a lot of debt on the books in terms of creating these blockbuster movies and blockbuster shows. I know I like some of the shows on the Netflix. They have Squid Games, Narcos. They have several in-demand, high content, binge watching shows on the platform. And again, they are trading at $525 right now. Who knows if they can get back to $700, but they are facing extreme competition now. You have other platforms like Roku, which is an aggregator, but it's still kind of in that subscription service type lane. You have HBO Max, Apple TV, Disney, all these streaming services compete with Netflix for viewers and subscribers. So will this be the slowdown of Netflix, or can they charge back up to the $700 per share? Who knows? Stay tuned and watch. And again, they report on Thursday, January 20th. So that is Netflix. Let's take a quick look at what Tip Ranks thinks Netflix, what the Wall Street analysts expect the stock to project it to. So we go to Tip Ranks. There is still some analysts, Wall Street analysts, that believe the stock can go as high as 800, but right now there's an average price of $662. And you know what? That's not bad. If Netflix can get back to $660 per share, that's not bad either. I mean, that's what some Wall Street analysts are thinking about Netflix. The high is 800, and then 662 is the average. Now that's pretty much cheap. If that stock can get back to $662, that's pretty cheap right now for Netflix. Right now, trading at $525 per share. But again, we do have to know it is high competition in this sector. You have Disney again, HBO Max, which is showing brand new movies next day on demand. And you got Disney, and you have Apple TV. So again, these are three stocks to watch in the next 2 weeks. You have a Bank of America reporting on Wednesday, the 19th. You have Netflix reporting on Thursday, the 20th. And then the following Wednesday, you have Microsoft. So those are three stocks to watch. Also, JP Morgan reported last week. So if you want to check out JP Morgan and what they said on the earnings call, check out jpmorgan.com/IR quarterly earnings for that information. So I want to thank you for watching. Thank you for listening. Please like, share, and we'll see you on the next video. Good night.